Alright, what's up everybody? This is Gabe, Chart Sniping 101 here. This is my first stock market video. I've been wanting to make a stock channel for a long time, and I felt like during this recent downturn, or crash really, for lack of better words, this would be a perfect time to start getting into it. I'm not going to give you guys the whole breakdown on the tariffs and what I think of them and what I think might happen. I'm not like a certified economist. What I do when I'm trading, which is really what I do for a living, but I'm mainly a technical analysis trader, which means I go off the charts. I react to price action. I look at historic movement, and I look at areas where a stock is likely to sell off or bounce based on the past and current indications. So it's really what it is, just analyzing price, analyzing stock movements, and we're going to go over today we're going to go over the main indexes that lead the country, which is SPX, the S&P 500, NDX, the NASDAQ, and DJI, the Dow Jones, and then their corresponding shares that are very popular and traded, like SPY for the S&P 500, QQQ for the NASDAQ, and DIA for the Dow Jones. So those are the shares like the SPY, QQQ, and DIA that you would buy to invest in if you wanted to start investing in these indexes. So, but I'll go off these for the charts, like SPX, NDX, and DJI, because I think people are more used to hearing these when you're thinking of the numbers that I'm going to be talking about. So, in terms of like the price level, so the S&P 500 is at basically 5,000 flat right now, 5,074. And just to really get straight to the point, I think this is a buy right now. If you want to start buying SPY right now, it's a great time. It's never too early to start buying, I think, in a downturn like this, as long as you are dollar cost averaging, which is basically just spreading your money out, saving some, a little bit this week, a little bit next week, etc., so that you're not buying all at once, because it's hard to really time the market. But on a downturn like this, you want to get exposure consistently. Because what if it goes down more? Well, then you'll have more cash sitting still. You didn't buy it all today. Goes down tomorrow. You're going to be good. You'll just buy more tomorrow as well. So dollar cost averaging is huge. I think it's a good time to start getting in. Like I said, if you're going to dollar cost average. But if the S&P 500 gets down to the COVID or the post-COVID highs from 2022, I think that's a good area to buy it. If you really want to start building a heavier position, like I said, buy some right now. I bought some yesterday and the day before. I'm going to buy some tomorrow on Market Open, but I will be deploying more cash at about 4,800. If you look at the COVID low, we had the COVID crash, brought us down quite a bit, about 35%, and then we had a massive rally, over 100%, up to a new all-time high at about 4,800, and we never were able to break past that until 2024. It took us a while because we had the whole inflation crash that lasted from 2020, like late 21 to late 2022, and it took us a while to recover. Looks like now that the S&P 500 will retest that prior high that it had at 4,800, so that that takes us down to about 5% downside from here, would give us that 4,800 level. That's a great spot to start buying, just based on, a likely bounce level on the chart. And if that breaks, I think that the S&P 500 goes down to 4,300. 4,300 is a pretty extreme drawdown if that actually happens. That would be in total about 30%. But it is possible, and I think that 4,300 would be a great level to really just hammer this home and buy a lot. You could also technically see 4,100, about that area. So, anything between 43 and 41 is a really good area where you could expect a big rally if we do get down there. And to clarify, we will have green days between now and even if we hit 48, but it is quite possible we kind of overextend to the downside and hit some of these key levels like 4,600, 4,300, 4,100. But these are all areas where I would mark and mark your chart and start buying SPY if the S&P 500 index gets down to the levels that I just mentioned. I think that'd be a very profitable opportunity. We all know at some point it's going to make a new all-time high. It's going to break 61.47. We don't know when, though. But once again, don't try to time the market. Just buy when it's low and capitalize off of the fear in the market right now and set yourself up for the future. So, yeah, SPY. I wasn't using this for the main levels just because it's skewed a little bit because of dividends, like on the S&P 500 index to reach the COVID 2022 post-COVID highs. It's like 5% downside from where we are. But if you look at SPY, it's like 10%. That's because of dividend adjustment. It's kind of weird. So you would really expect to bounce much before 460 on the S&P 500 because that's not actually really the pre-COVID high. This is, though. 4,800 is where you would expect to see a bounce. So that's a good level to start a position and kind of keep your eyes peeled. NASDAQ, it's at 17,400 basically. It's, post-COVID high was 16,800, give or take. So we can easily reach that. I mean, 4% downside, it looks like we're already going to be there tomorrow. This QQQ's trading down 4% overnight. So it looks like we are going to open at the 2021-2022 all-time high that was put in before the inflation crash. So that's a good spot to start buying. But if we look at this chart, where else do you think this is going to bounce? Probably around this 14,450 area. It's an area where we've had a lot of action. We had a bounce in late 2021 off this to take us to the all-time high. We had a bounce to save another potential crash in late 2023. So this 14.5K level is pretty important for the NASDAQ. And if that doesn't hold up, I can definitely see us going down to around 13.7, which is where we had a few more bounces as well. 13.7 to 13 flat. That entire area could serve as a big bounce area. And that would mark, I want to say 35-40% downside from the top. Yeah, 40% if we got that low. So I see it as a total possibility just looking at the chart and the aggression to which we've sold down. The volume's been really high on this sell-off, and I think that we could have a lot more in store. But once again, good to start a position now at these levels, but I think you really start to double down towards 14.5 and even 16.8. That's where I see this going. Definitely 16.8. That could hit by Monday at market open. So QQQ, buy shares of this. And then Dow Jones, I see this thing going down to probably once again, the 2022-21 highs. It's like 36K, 36.5K to be exact about it. So that's about 5% more downside. Once again, this could hit tomorrow or the next day. And I like that. I like that level as a good spot to start loading up on Dow. 33 is a low side target. That would mark about a 30% drawdown from the highs if I had to get a 27-28% drawdown from the highs. So 33K, a lot of action around here, maybe 34 to be exact. And you could definitely easily see a drawdown really down to about 30K, which was the pre-COVID high. I think 30K is you could definitely see that. That'd be a pretty extreme correction, but it's in the cards, in my opinion. If I had to really guess, if you put a gun to my head, I'd tell you it could hit 30K, and that would be an amazing spot to start buying. I believe that corresponds with Dow, 270 to 300 range, 270, 280, I don't know. Once again, the dividends kind of skew this. But yeah, so basically in all, these indexes are all trading very down. They had horrible weeks, all of them. The charts look awful. The daily chart, look at the S&P 500 fell basically 6% on Friday and about 5% the day before. So just awful movement for people who are bullish right now. But I will say with this type of movement, there's always opportunity to make a lot of money on your long-term portfolios and get some really generationally good prices. So We're going to do the Magnificent Seven tomorrow or the next day and look at them. Those are basically the 7 biggest tech companies that make up most of the market, or a lot of the market. Just to preview it, that would be Amazon, Meta, Google, Tesla, Nvidia, Apple, and Microsoft. So we will look over all those stocks in a few days, 1 or 2, and I'll do a video on those and talk about levels I would buy them at. Those are all 7 amazing companies that are worth adding to your long-term portfolios. But for now, I just wanted to go over the main market indexes, the benchmarks, and as you can see, it's a really good time to start buying. And I think, as I showed you guys with these charts, we're going to get some even better opportunities down the line, which, talking about these levels might scare some people, but others with the right attitude will look at it as an awesome opportunity to start building what I would call generational wealth. So I hope this video is helpful. Once again, get on Webull. This is what I use for my charting. I'm not sponsored, but I love the app. I've been using it for years to trade. Set alerts on your phone to see, and to be notified when the stocks and indexes I just talked about reach the levels I just told you guys. That way you guys can be ahead of the game and get in at the best prices possible to all these really good buying opportunities right now. So stay tuned. We're going to have another video up really shortly in the next few days about the Magnificent Seven and what I think is a good time to buy all those. Peace out. Appreciate you guys watching.